Ladies and gentlemen, good day and welcome to IG Petrochemicals Limited Q4 and FY2024 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on of this date. These statements are not the guarantee of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participants' line will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pramod Bhandari, CFO of IG Petrochemicals Limited. Thank you and over to you, sir.
Thank you very much and good afternoon, everybody. On the behalf of IG Petrochemicals, we welcome everyone on this call. On this call, we have SGA, our Investor Relation Advisor also. Unfortunately, Mr. Nikul Dhanuka, our MD, could not participate today, earning call due to some unforeseeable event. He has asked me to pass his regards to the stakeholders on the call. On the business performance, I hope everybody had an opportunity to go through our financial results and investor presentation, which has been uploaded on the stock exchange as well as the company's website. We will give you a quick overview of the recent development on the industry and how IGPL is moving forward. Post that, we will like to have a one-to-one session in terms of through operational and financial highlights. In the financial year 2024, the prices of the major bulk and the petrochemicals has remained under pressure, aggravated by the ongoing geopolitical crisis, slow recovery in the major economy and Red Sea crisis, which has extended to overall trade costs. Additional inventory stockpile has further surpassed the prices of major petrochemical derivatives and key feedstocks. As a result, the growth momentum of the numerous chemical companies has been impacted throughout the year. Demand from the end user market has been mixed. The demand for the plasticized or polymer clients remains subdued, while the UPR and pigment segment has recovered well in the later part of FY24. Despite multiple headwinds, we are elated to say that we have closed the financial year with a revenue of around 2,130 crore. Though due to the price and the spread volatility, our profitability were impacted for full financial year. Phthalic anhydride is our primary product. We have not only pioneered it in India but also imprinted our leadership position since its foundation. We produce phthalic anhydride, malic anhydride and benzoic acid as well as the advanced plasticizer of BP at our Taloja plant in Mumbai near to Maharashtra. We are delighted to say that our PFIF unit has successfully completed in last quarter. Post the expansion, our capacity of PAN, MAN and BA has been expanded respectively. Based on the current price, we are expected to have an incremental revenue of 500 crore from PFIF from next financial year. There are very few manufacturers globally that supply high-quality phthalic. IGPL is the largest producer in India and second largest in the world. It is important to note that phthalic anhydride is a key raw material. It is consumed by a wide range of the industry. We foresee the demand of this product to grow at an annual rate of mid-digit between 5 to 7%. We have sufficient capability to serve and cater the market, driven by its versatile application as well as raw material intermediate for many downstream chemical users. As highlighted earlier, we are actively pursuing to add new downstream products with wide range of plasticizer to our product portfolio. We plan to invest approximately 165 crore, excluding the GST, and expect this project to complete in next around 18 months, post receiving all necessary approvals. Once the plasticizer facility is up, this project will consume around 30 to 35,000 tons of phthalic anhydride. In essence, more than 50% or 60% of phthalic anhydride produced by PFIF unit, which we have recently started, will be used for the downstream plasticizer. The captive consumption is expected to utilize in FY26 and 27. On the operational highlight for the quarter, ended the total revenue, including the other income, stood at 563 crore as against 611 crore. The sales for non-phthalic business stood at 36 crore. Export contributed around 13% of overall phthalic business. EBITDA stood at 36 crore with a margin of around 6.3%. Profit after tax at 9 crore for the quarter. For the full financial year, total revenue stood at 2,130 crore with a decline of 10%. The The revenue from non-phthalic business has contributed around 159 crore, and export contributed roughly 10% of total phthalic anhydride business. EBITDA stood at 136 crore with a margin of 6.4%. EBITDA was impacted due to the lower spread between OX and PED, which continued to remain between 100 to 150, and due to decline in the prices, sharp decline in the price of the malic anhydride. The net profit stood for FY24 at 40 crore. Currently, the company boasts a robust balance sheet and maintaining a working capital cycle between 20 to 40 days, which is one of the best in the industry. We anticipate this expansion will generate healthy cash flow and further strengthen the company's position. As a part of de-risking and diversification, we aim to expand our downstream derivative products to increase the presence in the Indian domestic market. The expansion is expected to improve our operating leverage and boost the profitability and potentially increase the revenue for non-phthalic business. Over the past 2 to 3 years, we have made some few strategic decisions to meet the rising demand of our product. These decisions are part of our holistic approach and strategy for providing better value proposition to our business partners and to become a well-diversified chemical company. With this, I would like to conclude the presentation and open for question and answer.
Thank you very much. We will now begin the question and answer session. Participants present on the audio bridge who wish to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rahul Jain from Credence Wealth. Please go ahead.
Thanks for the opportunity.
Yeah.
Yep. Samadji, with regards to the pricing scenario of both our product, phthalic and OX, and the spreads between two, how has it been in the quarter gone by? And given the current situation environment, how do you perceive it to be in the next 2, 3, 4 quarters?
So, for the quarter gone by, Jan and Feb was subdued quarter because it's continued from November, December, Jan, Feb. But we have seen the recovery in the start of March, which has been further improved in April onwards. So earlier the margin has gone below $100, around $60 to $70. Now it has come back again to between 150 to 160, 170. So I think we have already made the bottom. Now we are on a recovery path, and we see gradually there is an improvement in the margin.
So are you saying the spread is currently around 150 because the previous quarter Concall we said it was around 100 to 120?
Correct.
That 100 to 120 has moved now to 150?
That not for the quarter, but it has moved gradually from March onward.
Okay. And sir, with regards to our PFI, how is the capacity ramp up happening? We started this plant somewhere in February. So the utilizations, the stability have picked up.
I think utilization and everything is fine. I think we will be able to achieve in current quarter the utilization of that plant, and utilization will not be challenged. However, there are some things in terms of the change in the catalyst and the government requirement. We need to take shutdown of 1 or 2 units in next 1 or 2 quarters. But for PFI, we will be able to reach at 90 to 91%, which is the optimum capacity.
So this year for this 53,000 tons plant, for FY25, can we expect a utilization of around 85-90%?
Between 70 to 85%.
Haji, sorry?
Between 70 to 85%.
Between 70 to 85. And sir, with regards to starting this plant, the overall cost of operation, both the fixed and the variable, the operating cost of phthalic anhydride, how is it moved from before starting of this plant and after starting of this plant?
Conversion cost, which was around $100, it has reduced by around $10 to $15 per ton. I'm talking about the conversion cost because the fixed cost has to be divided between all the 5 plants compared to 4 plants. However, in terms of the depreciation and in terms of the finance cost, because the debt which we have raised for this purpose will be reflected in the balance sheet. It has been started reflecting in balance sheet from 12th Feb onwards. So typically you will see the full reflection of that, the depreciation which was 42 to 43 crore. Now full year depreciation is around 60 crore. typically the finance cost was 6 to 7 crore. Now it will be between 9 to 10 crore quarterly, and annualized 35 to 40 crore.
So when we say conversion cost, it will be between the spread and before the EBITDA. Is that, before the depreciation and finance cost. Is that correct?
No. Fixed cost, when I'm saying conversion cost, what are the things required to convert the raw material from final product? It doesn't include the fixed cost like rental, administration cost and all that. Conversion cost like all the catalyst or energy cost, repair maintenance, which is incurred actually at the factory level.
Sure. And sir, so along with the fixed costs, we'll have another $40-50 per ton of fixed cost to be added to the conversion of $90-95?
100%.
Okay. Sure.
I think next quarter results you will be able to see full reflection, because the last quarter, the PFI capitalization has started from 12th or 13th Feb onwards.
And sir, with regards to the scenario, how do you compare this cost versus our competitors, both domestic and globally?
I think for IGPL, we are one of the lowest cost producer, not only because of the conversion cost, but also for the other like finance cost for a single size company of 2,500 crore revenue. Finance cost is also, if you benchmark it, is 50% of that. And the total fixed cost, which all the plants are at single location, so entire fixed cost is spread among the 5 plants. And manpower, more or less, except 5 to 10 guys, remain same. So, in terms of the overall costing, we are one of the lowest cost producer. And our repair and maintenance cost is also one of the best in the industry. Because we have set up all the new plants based on the Unity technology and German equipment.
Okay, sure. So last one question on the global scenario on phthalic side. We have been reading reports on 2 fronts. One is the naphthalene-based production. Since naphthalene prices have been going up, so typically some of the plants, more so in Taiwan, have been facing issues in terms of their cost of production. That is on the naphthalene side. And on the other side, we are also hearing about closure of plants. So one of them being AU King Petrochemical, that was supposed to close down in April. And also Mitsubishi Gas also has plans to shut down the phthalic. So can you give some more details about the kind of capacities getting closed?
So basically, whenever the phthalic price goes or margin goes below $100, we see a lot of guys in the international market where conversion cost is around 150. They are not able to sustain. However, some guys who are operating at naphthalene, because the gap between naphthalene and the OS was widespread between $250 to $300. So a lot of guys who has a phthalic plant based on naphthalene, who are the marginal players, whenever there is a gap increase, they started the production. Now, because of the change in the naphthalene prices, increase in that margin, the production will reduce. Number second, generally these players are into the China side. And Chinese government, because of the pollution and all that, is harping very sharply on these guys because they create a lot of pollution. Plus, it is not a technology efficient way of production of phthalic. In fact, the Indian government is also looking at setting up the standard not to allow naphthalene-based phthalic to enter into India. But overall scenario looking promising because now the demand is also going up in the domestic market with all the sectors which we were catering for the last quarter compared to last quarter, all the segments, paint, pigment, CPC, every sector has shown or demonstrated a good growth in this current quarter, last quarter, ended FY24.
Sure. Thank you, sir. Wish you all the best.
Thank you. The next question is from the line of Pranav Manhora from Robo Capital. Please go ahead.
Hi, sir. Thank you for taking my question. So first question is, in what year can we expect to reach the 3,000 crore mark of revenue? And again, till when can we expect to reach 15% of margins? That's my first question.
So revenue I can tell you, but margin is all depend on the market. The revenue, I think we will be expected to complete the plasticizer project between September to December 2025, say next year. So from 15 to 18 months from now, which for plasticizer standalone basis will add 900 crore revenue. But you need to reduce the phthalic, because phthalic is what is internally consumed from existing plant to the plasticized plant. So net revenue will increase by 500 crore. So today we have roughly 2,100 to 200, 450 to 500 is added because of PFI, and another 500 will take around 3,000 to 3,200 crore. So for FY26-27, full financial year, we will see the revenue crossing 3,000 crore. For margin, I think it's a matter of the demand, supply, international market. You can't control the margin sitting in India, because India is less than 5% of overall market. However, whatever is the international market margin, IG, because of the operating efficiency, because of the byproduct like malic, benzoic acid, and now downstream into DEP, is making around $100 over and above the international market margins. So guidance is always relative rather than the fixed, because it's a link with the international market price.
Sure, but any guidance on maybe then just FY25? What are the margins looking like?
So I would not like to give any guidance right now, because we have just seen the recovery in the March month, which is spelled now into the April and May. So let's look. I think it will be wrong to give the projections for 12 months. Wait for 1 or 2 quarters. We will have more clarity going forward.
Okay, sure. And the next question is regarding debt guidance for preferably next 2 to 3 years. What are we looking to repay and till when? Overall, basically guidance on debt.
So right now we are net debt zero, and because the cost of funding has gone up slightly in some 1 rupee loan case, so intend to prepay around 50 crore rupee in next 1 or 2 months. So balance that average cost is around 5.5% to 6%, and we continue to maintain that healthy mix of debt and equity, because if you are making 7.5 to 8% in treasury and your cost 5.5, it makes sense. Whenever the cost of debt crosses 7.5 to 8%, we feel that it's the right time to prepay.
Okay. And one last question. So, what are the PAN spreads looking in FY25 and 26? What are your thoughts on it?
You are talking about not 24-25. You are talking about 25-26.
Overall, FY25, 24-25, and 25-26 as well.
So I think I will not give you any guidance for the margin, but in general, if you look at the market for last 10 years, the margin moved between $100 to $400. So it is advisable not to look at the quarterly margin. Look at the average of 5 years, which generally coming around $150 to $200. The last 10-year average, if you take it, is between $150 to $200.
Right, and we are looking to maintain that as well, right, for next 1 to 2 years minimum.
Subject to the market.
At least we are okay.
If market is 100, we will be having between 200 to 220. If market is 200, we will be having between 300 to 320. Gross margin I'm talking about.
Okay. Got it, sir. I'll get back in.
$100 over and above the market.
Thanks a lot, sir. I'll get back in queue. Bye.
Yeah.
Thank you. The next question is from the line of Aditya Khandelwal from Securities Investment Management Company. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, if I have to understand the total world capacity of phthalic anhydride, how much would be from naphthalene and how much would be from ortho-oxidine?
So typically, 75 to 80% capacity is based on the ortho-xylene, and around 10 to 15%, majorly in China, is based on naphthalene. Naphthalene is not naphtha, which generally people correlate it. It is naphthalene is the byproduct of the steel plants. It is not naphtha, it is naphthalene, which is the byproduct of steel. And this naphthalene is used to produce, and there is a wide gap between OX and naphthalene. This is not the efficient technology, plus it is more polluted, and the conversion cost is much higher than the OX conversion to phthalic.
Understood. So you mentioned that there have been shutdown capacities which are manufacturing from naphtha base, but have you seen shutdown capacities which are based on ortho-oxidine?
There are some, because it need to be looked at not as an individual plant, but overall capacity as a part of global strategy. If global players look at their refinery come petrochemical, and they evaluate and decide whether they need to run it or not. Some of the players taken the temporary shutdown. Some of the players decided to permanently shut till there is an improvement in the market. It all depends. But naphthalene, we have seen that now a lot of plants are planning to close again. Once because of pollution, and second, the prices of the naphthalene has gone up.
Okay. And sir, in terms of to understand domestic scenario, what would be our capacity currently after this expansion of phthalic anhydride?
We have a capacity. We already had a capacity of 275,000 ton of phthalic, around 8,000 to 8,500 ton of malic anhydride, and around 1,000 to 1,200 ton of benzoic acid, and 8,400 ton of DEP.
And what would be the capacity of our competitor and another customer which are backward integrated into manufacturing phthalic? So in total, what
new customer will enter into the market. I understand that capacity is around 90,000 ton. And for Thirumalai, I think they have between 120 to 140. They have not published anywhere the capacity, but I understand 120 to 130 is their capacity right now.
Okay. So the domestic capacity would be around 6 lakh tons for India, right?
Not exactly. 230 and 275. Around roughly 550 to 600.
Yeah. And what would be the total domestic consumption currently in India for phthalic?
It's between 500 to 550.
500 to 550. And what is the percentage of imports which generally happen? Because we saw a dip in imports during COVID.
Typically import earlier was around 10 to 12,000 per month. But one player who was downstream, who has done the backward integration, so he stopped the import. Now the import is around 3 to 4,000 ton per month, which is half from earlier import. Because once you start your own facility, you don't need to import it.
Okay. And sir, generally the imports spread which the imported players make and what we make, is there a big difference?
No, there is no difference. Generally, the smaller players or the medium players can't import because the logistic cost typically is very high. So when you are importing, you need to import in a big quantity. So generally, imports are not done by any small player or medium player. Big players used to do. Right now also, it is coming from China, Taiwan, Korea, but very small quantity, now 3,000 to 4,000 tons. But we also export around 10 to 15% of our product. So it creates equilibrium in the market.
Okay. And so just one question. So with so much capacity coming in for phthalic and domestic markets, do you foresee a situation that the spreads would remain, lower than usual because of so much capacity coming in and the demand not meeting with the supply? So do you expect a situation that... Hello?
I understand. I understand that. First, you need to understand that the margin is not the link with the Indian demand, supply and capacity. It's like diesel, gasoil and gasoline. The margin is $20 or $30. Whether the lines produce higher or lower will make any difference to the international market margin? No. Because in overall scheme, it is less than 3% of total capacity. Similarly, in phthalic also, the margin is determined by the international market price. You may have a competition. You can always say that over the international market margin, if there is a competition, you make $80 or $100, $120 or about the market margin.
Understood, sir. Understood. And sir, what was the capacity utilization for us this year? Are we operating at 100% utilization?
We are operating roughly 85 to 90% of our units. But some of the units we need to take every year the shutdown for changing the catalyst or with general repair and maintenance. And sometimes we need to take the shutdown for the boiler inspection because there is a regulation where we need to have an inspection every 3 years for the boiler. So based on that, every year, 1 or 2 quarters, we take the shutdown for one unit for inspection, normal routine, repair and maintenance, as well as changing the catalyst.
Understood, sir. Understood. Thank you, sir, for answering my questions.
Thank you.
Thank you. The next question is from the line of Nirav Jimodia from Envil Research. Please go ahead.
Yes, sir, thanks for the opportunity. I have 2 questions. So first on the plasticizer side, like we have been putting up a capacity of DOP, DINP. We already have DEP. So if you can just help us, the application-wise, where these products would be going, who are the competitors or the other producers of the same product in India, as well as whether the margins would be better than our existing DEP So some sense on that would be very helpful.
So basically, the plasticizer is a less capital intensive project where you spend 160 to 170 crore while your revenue will be 900 crores. So when you look at the overall margin of the revenue, it is 5 to 7%. But when you look at on 900 crore, 5 to 7%, your payback period is less than 3 years. The capital turnover ratio in the plasticizer is very high. By spending 170 crore, you are getting 900 crore revenue, which is more than 5.5 times. That is one. Apart from the IGPL, which is setting up the plasticizer project, various type of plasticizer, there are other players, bigger players in the market, like KJ and Pile. But IGPL will be the third largest player after setting up the capacity. We are planning to set up some generalized plasticizer like DOP and then some specialized plasticizer. So overall, when you look at margin, it ranges between 5 to 10%. But we look at from the payback period point of view, IRR point of view, which is very lucrative because your revenue multiple compared to the capex is 5 times plus. And in terms of demand, I think India is self-sufficient. The demand is growing between 7 to 8% for the plasticizer, and it's directly linked with the Indian economic growth. If India continues to grow at 7 to 8%, it has generally 1:1 of the correlation. So it continues to grow, and it has multiple uses and the application. Everywhere that you see the plastics, whether the fragrance, the roads, infrastructure, construction, pipeline, rubber, everywhere different plasticizers are being used.
Thank you. The next question is from the line of Aditya Khetan from Smith Institutional Equities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, first question, as it was rightly mentioned that there are some capacities globally which are getting shut down in March and April, which has led to like a spreads improvement. So this spread improvement is based on this, this phenomena, or the demand itself in the system has gone up?
It's a both way. Once the margin go down, some of the capacities which are marginal, which has a conversion cost higher than the margin, then they tend to shut down. Number second, when they shut down, then it creates equilibrium in the market, and when the demand come up, then they see that there is not much supply available, then automatically, gradually you see the improvements. This is the typical cycle for all type of commodities as well as chemicals. If the margins are too low, some unit will shut down, then demand will go up over the period of time, and you see the gradual improvement in the margin.
But sir, what if this capacities, so now the global spreads have moved up, so what if this capacities now restart? So can we assume that the spreads could remain constant, or there is a risk again it can go down?
I think the overall demand has impacted because of geopolitical issue, because of the Russia-Ukraine war and other geopolitical issues, and deficiency of the gas in the German market, because a lot of customers to whom we are selling our product, they sell to Europe. Now we have seen like pigments are used to sell 40-50% product in Europe. We have seen dumping the demand for probably first or second quarter. Now we have seen they have again come back to 80-85% of capacity, and we expect demand to continue to remain robust from European market and the US markets.
Got it. Sir, on to the capacity expansion. So net revenue addition you mentioned that is around 1,000 crore. Sir, if you can recalibrate how this 1,000 crore figure will be added to the top line?
So it will be around 450 of phthalic, around 50 crore of malic benzoate,
okay.
And 900 crore will be the various type of plasticizer. But you need to reduce 400 crore of phthalic which will be used. So net plasticizer will be 500 crore, 450 crore will be phthalic, and 50 crore will be the benzoic acid and malic anhydride.
So for malic anhydride, you said it would be 100 to 150 crore.
It's a 50 crore, not 100. I'm talking about incremental. Right now, the capacity is around 8,000. Today, the malic anhydride prices are again 20% lower than phthalic. So overall realization is lower. Typically, historically, it is 20% higher than phthalic. If only there is an improvement in the malic prices, based on the historical benchmark, our EBITDA will go up by 25 to 30 crore.
Got it. And sir, this 30 to 35, so this figure of 35K tons pan consumption, So how much is the ratio? Like at peak utilization, we are expecting 35k tons of PAN will be consumed.
If we are operating at full capacity of 75,000 tons, so typically 32 to 33 is the consumption of phthalic. But it depends upon what combination you are using. DUP has a different ratio. DINP has a different ratio. I am telling you the weighted average, 30 to 35%.
Okay, got it. Thank you.
Thank you. The next question is from the line of Munzil Shah from Antique Stock Broking. Please go ahead.
Thanks for this opportunity. I have a couple of questions. One is sourcing of your raw material or the xylene. So at full capacity, from where are you sourcing this raw material?
Typically we source around 50 to 60,000 tons from Reliance, and around 5 to 6,000 tons we are importing in the international market.
And what is the scenario, sir, for this orthoxylene, since, there will be further capacity coming up in India. So do we have enough supply of orthoxylene, or, the dependence on import will increase?
I think right now the capacity which they are operating, it will be sufficient for the existing player. But if you are adding a new plant, you need to import it because there is no new capacity has been added. Although some spare capacity they have, but it depends upon when they will start. Till the time they start, it's their call. But ultimately, beyond that, in general also we are importing typically 3,000 to 5,000 per month. So now you need to look at that. If there is a further requirement, you need to import it, and it is easily available in the international market.
And any of the orthoxylene capacities are coming up globally, sir?
In global market, there is no separate orthoxylene capacity. All the bigger players who has a refinery come petrochemical, they are producing the orthoxylene. So orthoxylene is not a standalone capacity; it is part of refinery come petrochemical complex.
Sure, I understand, but within that petrochemical cycle, would orthoxylene also be produced more? I just wanted to understand that.
Right now, sufficient quantity of orthoxylene is available. There is a way through which you can increase the ratio of orthoxylene, because the mixed xylene converted from the naphtha go into paraxylene and orthoxylene. If there is a demand enhancement, so somebody will put the refineries we don't have right now, the PX and OX unit, they can set up the unit as a part of their petrochemical complex and produce OX and PX. OX is around 15 to 20% and PX is around 70 to 75% when you set up your plant as a part of the mixed xylene conversion into PX and OX.
And secondly, sir, I wanted some updates on this user industry. So currently, what was paint and non-paint for phthalic?
So paint is roughly 10 to 15% or sometimes 20%. CPC is around 15 to 20%. So paint, CPC and plasticizer put together is 50 to 60%. Balance come into the DP, specialty, UPR, which comprises around 20 to 25%.
So paint is only 10-15% right now.
15%. It's moved between 15 to 20. Depend upon the season.
Sure.
In Deepavali season, when there is pre-Deepavali season, like say April, May, June, paint has a good demand because they are in the process of production of paint, which is used near to the Deepavali. And CPC and the plasticizer have a demand throughout the year. Specialty also have a demand in the second half of the year.
And two more questions, sir. One is with regards to, suppose if we have surplus capacity in the domestic market, maybe 1-2 years down the line, what is the export market that you're looking at, and the margins?
We are typically export around 10, historically 20%, but right now 10 to 15% we export, depend upon, and generally the target area of the export is the Middle East.
Sure.
Sometimes to Africa, Egypt and that, but generally 80% is Middle East, balance 20% is other area.
Okay, and the margins in exports case?
I think you can't stand alone calculate the margin because you get the duty drawback, you get the export fulfillment under EPCG. So there are a lot of things. Which you need to calculate, but generally it is slightly lower, or you can say benchmark against the domestic market.
Sure, sir. And last question is, sir, outlook on malic anhydride, because I believe currently it's in losses. So, what would be the outlook on malic anhydride going forward?
For us, we are not making any losses in the malic anhydride. Malic anhydride we are producing from wash water. So whatever is the revenue is EBITDA for us.
Okay.
However, if somebody is producing it from N-butane, then of course, because the cost of the butane is very high, and the prices of the malic anhydride has gone down 20% below the phthalic, which is not the case historically. So I think we are looking at 25 onwards, there will be an improvement into the malic prices.
Okay. Thanks a lot, sir.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. Should you have a follow-up question, we would request you to rejoin the queue. The next question is from the line of Madhur Rathi from Counter Cyclic Investments. Please go ahead.
Hi, thank you for the opportunity, sir.
Sorry to interrupt you, sir. May I request you to please use your handset?
Yes, is my voice better right now?
No, sir. Can you come near to the mic and speak, please?
Hello.
Yeah.
Yes, sir. Now it's better.
Sir, so currently, as the prices, as the spreads are around 150 to 170, and we have an advantage of being a low-cost producer and $80 to $100 advantage. So does this mean that our spreads for IG Petro are near 250 kind of range?
Sorry, can you repeat your question?
Sir, the current spreads of phthalic and ox are near 150 to 170 as you mentioned, and we are the lowest cost producer with a $100 advantage. So does this mean that our spreads are around 250 odd dollars?
No, margin, whatever is the market margin, because of operating efficiency and the malic, we are making roughly $100 over and above the market margin. If margin is say 150, we will be making around $250 to $260.
And so the current margins are around 150 to 170, right?
Current margin of market is between 150 to 170.
Okay. And so next question would be, sir, the malic, Chinese were going into ban of the single-use plastic, and the demand was going to come very strong. So are we seeing some kinds of green shoot in this segment right now?
Chinese have set up a lot of capacity of malic anhydride in view of conversion of malic into BDA to PBAT and PBT. But they postponed the production of PBAT and PBT, which is used for the single-use plastics, BAME. So they have postponed it to January 25. So we expect margin of malic to improve post-Jan 2025 onwards.
Okay. So this, the way Chinese are set up, they are not producing phthalic and the byproduct malic is getting sold into the market. They are producing it through a different route, right?
Correct.
Okay. That's it, sir. Thank you and all the best.
Thank you. The next question is from the line of Akshay Kothari from JHP Securities. Please go ahead.
Thanks for the opportunity.
Sorry to interrupt you, sir. May I request you to please use your handset?
Am I audible now?
No, sir. Your voice is very less. Can you come near to the mic and speak, please?
Am I audible now?
Yeah.
Now it's clear.
Yeah. So I was just going through one of the reports by SNAP Global. It reads out that the REACH regulation in the European Union are calling for gradual replacement of phthalate-based plasticizers. So, from my understanding, phthalate goes in plasticizers, paints, and resins. So, on that front, do we foresee any slowdown in demand for phthalic as such only, and what is the substitute product which these guys are using?
So, there are phthalic, which is, there are plasticizer which is produced without phthalic, but that is very limited quantity because some of the places where phthalic is used, you can't use non-phthalic based plasticizer, like pigment, PVC and all that. Having said that, in the new plant which we are setting up, we have a flexibility to not only produce DOP but also DOTP, which is a non-phthalic plasticizer. So we have planned our plant in such a way where we will have flexibility to produce both phthalic and non-phthalic based plasticizers.
That is on the plasticizer front, which is, I think, not a very big problem because Indian plasticizer demand is growing. But I'm talking in terms of phthalic as an end consumption for plasticizers. So is it getting reduced?
No, not right now, because in India, the plasticizer industry takes 10 to 15% of the phthalic. Otherwise, phthalic goes into paint, plasticizer, PVC, pigment, specialty chemical, agrochemical, photofilms, UPR. It is used in more than 22 industries. Plasticizer is one of the industries. And all the industries, including the paint, plasticizer, pigment, PVC, CPC, everybody is growing at 8 to 10%. We don't see a big challenge. Of course, there are some European countries which are not using plasticizer based on phthalic. But in India, I think it will take again 15 to 20 years. And we, at our new plant which we are setting up, we have a flexibility of to use both phthalic based and non-phthalic based, produce non-phthalic and phthalic based plastic.
That's it from my side. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, good evening, sir, and thank you for the opportunity. So my first question is regarding the OX. So I missed on your consumption for orthoxylene. So can you repeat that?
So we typically, whatever is the phthalic production, we need around 92% of the orthoxylene equivalent to. So typically 10 to 15,000 ton we are buying from domestic market, and balance 5 to 6,000 ton if required we import. Generally we import 3,000 ton minimum, maximum go up to 6 to 7,000 ton every month.
Okay, 3,000 to 6 to 7,000 import every month.
Yeah.
Yeah. So what is the current capacity for OX right now in India?
In India, the capacity is around 330 to 340, but at peak it can go up to 450. Nameplate capacity is operating at around 330 today.
Yeah. So given the increase in capacity of phthalic anhydride, so it should definitely lead to higher consumption of OX. So how are you planning to source OX?
We have our model based on the 66% of the phthalic for domestic and 33% is from the import market.
Okay, so don't you see crowding out effect with respect to OX, like other players also going to demand?
I understand your point, but Indian capacity is less than 4% of global markets. So in the world, the capacity of the phthalic is 6 million ton, operating at 4.4, 4.5. Similarly, OX capacity is also 5 million ton plus. So when you're talking about the global market, so small quantity required by the Indian players doesn't make any dent or difference into the international market.
Yeah, great. So what is the delta between when we import and when we source it domestically? What is the price differential between that?
If you do generally on term contract, then $15 to $25. And if you buy a spot, sometimes you get the cargo at lower than the domestic price, sometimes you get higher than the domestic price. So both the things are based on how you are procuring, to whom you are procuring, and timing of your procurement.
Okay, thank you. And the second question was regarding, in earlier calls, you mentioned that greenfield plant similar to PA5 would cost somewhere around 600 to 650 crore with a capacity of 53,000 ton per annum. So our competitor has expanded a much larger capacity at a similar cost bracket. So I just wanted to know what advantage we got over them in terms of efficiency.
We set up the plant. We set up the plant of 53,000 ton in typically 350 crore, less than 350 crore. Typically, if you set up at a greenfield, it will cost you 500 to 600 crore. I'm not aware about the cost, but typically, if you are setting up 90,000 ton, it has to be between 800 to 900 crore.
Yeah, our competitor Tirunelveli Chemical expanded similar 90,000 ton per annum for 550 crore, I think so.
but I don't have a ready number with that, but you can refer it to the KLJ. They are set up at 8 to 900 crore of 90,000 ton. I think it is there in the Environmental Ministry or somewhere in the document.
Oh. Yeah. Thank you for that, and thank you and all the best for your future endeavors. Thank you.
Thank you.
Thank you. The next question is from the line of Nirav Jimodia from Envil Research. Please go ahead.
Yes, sir, thanks for the opportunity again. My line got disconnected. So I have two questions. So one, you mentioned that the spreads have recently strengthened to around 150, 170. Could there be a reason of the current container shortages or the freight rates going up because of the Red Sea disruptions, because of which the material movement had become slightly lesser, or the transit time has gone higher, and because of which we have seen the strengthening of the spreads, or it is because of the demand gone up in the international market and we have seen such spreads getting strengthened?
It's a couple of factors together. I think first, a lot of plants either taken a temporary or permanent shutdown. Because of that, the demand has come up and no regular supplies were there. That is one of the reasons for improvement. And second, it can't sustain at that level where it is lower than your conversion cost. Correct. So nobody will operate the plant if you are getting the cash losses. Number second, your point is right, because the freight cost typically has gone up between 50, 60 to 70% when you are importing. Plus the time has also increased. So it's a freight, transportation, insurance, forex, logistics, tankages, everything put together. You need to incur around 5 to 7% extra. So because of that, for any marginal player, it is not advisable to import unless you are importing 5 or 10,000 tons.
Correct. So, sir, let's say if we are earning $100 because of operational efficiency over and above those global margins, currently, is it fair to presume that we may be earning $20 to $30 extra just because the freight advantage is coming in our way and those materials are not coming in?
That we can't calculate it today, but it is also applicable for us when we are exporting. So it's neutralized. You are exporting the similar also the product in Middle East market, which is around 10% of our total products.
Correct. So currently also we are exporting out, or?
Currently we are exporting around 10% of our product overall for FY24.
Got it. So second question is, last quarter our sales volume were close to 48,000 tons. So have we seen any improvement because of the commissioning of PA5 this quarter, and if yes, how much was the improvement in percentage terms?
So typically it is because the PA5 has started in mid of Feb. So as such there is no direct impact, but in terms of the overall value, 5 to 10% has changed compared to the last quarter.
Correct. So possibly this quarter our production would have exceeded, or the sales would have exceeded 50 KT.
Yeah.
More or less.
Yeah.
So last bit from my side is, we generally have the catalyst change every year because we have 4 plants and they recently commissioned. Probably that would have some time before they get touched. What is the annual cost we incur for the catalyst, and does that charge at the P&L level, or do we capitalize that amount?
No. First, we incur between 8 to 10 crore rupees for the change in the catalyst. For the energy cost, which we incur like LSFO, which we are planning to now replace with the natural gas or the diesel, that is directly charged to the P&L. For the catalyst cost, we spread over the period of 3 years.
Over a period of 3 years?
3 years, because catalyst life is 3 years. It will be wrong to take into P&L for 1 quarter. So every catalyst is spread over the period of 3 years or in 12 quarters. And balance cost like energy and all, which required to start up the project and all, is directly charged to the P&L.
So let's say for FY24, how much of the cost would have passed through the P&L for catalyst?
I think 4 to 5 crore rupees. No, not catalyst, for the energy. And the catalyst, typically, when you look at all together, so 7 to 8 crore of the catalyst cost coming, sometime I think 15 crore, sometime 20 crore, in a year it is coming into the P&L.
Correct. So you mentioned that once we switch to natural gas, this FO cost won't be coming on, so there would be some savings. So this cost of 4 to 5 crores, what we incur on an annual basis, how much savings?
Typically not. We incur on energy. which include LSFO, which include the diesel, which include the electricity duty, we incur around roughly total, if you are talking about 45 to 50 crore. Post P5, it may be slightly higher. So when we convert into natural gas, it will save minimum 20% of the total cost. Roughly 5 to 20%. So 5 to 6 crore per year.
Okay, so this would have a savings of 5 to 6 crores on an annual basis for us.
Yes, once it is fully operationalized on natural gas.
Got it, sir, got it. Thank you so much, sir, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Aditya Khetan from Smith Institutional Equities. Please go ahead.
Sir, thank you for the follow-up. Sir, in this fiscal, in FY25, sir, in which quarter we will be taking the catalyst change?
As of now, we have not decided. We are evaluating. Maybe for the first or second quarter, not only it will be for change in the catalyst, but also it is for the purpose of overall repair maintenance, because we take overall repair maintenance and catalyst change together. And sometimes it is also along with the boiler, because every 3-4 years you need to get the boiler checked from the boiler inspector.
Okay, so we should factor in slightly lower volumes in next quarter because of this catalyst change?
I think rather than for the quarter, for a year you need to assume the 2 plants are down for a year. Because quarter you can't predict which quarter.
Okay. Sir, onto the plasticizer side, sir, what is the peak utilization level here, whether it is 90% or 95%?
It will be between 90 to 95%. There are some flexibility in that. It can go up to, say, 80 to 85, 90 also. But right now we are talking about the 75,000 ton. It can go up to 1 lakh ton. There is an inherent flexibility inside the system. First, we are planning to set up that, and then gradually, based on the requirement, we will improve the debottleneck the capacity.
Okay, and this new plasticizers of the DINP, DOTP, so as compared to our current basket of DEP, so the realization are higher, or it is all?
It's a different product, different realization. It has 7-8 type of plasticizers. DEP has different margins. Weighted average, it is expected to generate 5 to 7% of PAT on revenue.
Sir, sorry, I missed your 5 to 7%?
5 to 7% of PAT on revenue. And if you are targeting revenue of 900 crore, you say around 50 crore to 60 crore PAT on the investment of 160 to 170 crore. And it also depends upon the price at which you are transferring the phthalic. If you are transferring the phthalic at the market price to whom you are selling the customer, then margin will be different. If you are transferring the phthalic at the cost or say the lowest selling price, then the margin will be different.
Got it. And sir, this plasticizer capacity, this will be starting by 2026?
25 end is what we are targeting. September to December 25.
September to December. Okay. Thank you.
Thank you. The next question is from the line of Madhur Rathi from Counter Cyclic Investments. Please go ahead.
Sure. What is the domestic demand for plasticizers in India?
So plasticizer has typically demand of between 3.5 to 4 lakh ton. It may be now 4.5, but last year I have said it was around 4.4 million ton. So it is growing at 8 to 10%. And plasticizer is not only one plasticizer. There are multiple 10 to 15 types of different plasticizers, all put together.
Okay. And sir, our capacity would be 75,000 tons, right?
Correct.
And sir,
8,400 ton is already for the DP, which we are operating.
And additional to that, 75,000 tons. So who will be the biggest player in this segment, and what will be their capacity?
I think it is KJ, and capacity is between 2 lakh to 2,50,000 tons. You can check in their website.
Okay, sir. Thank you, and all the best.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that would be our last question. I would now like to hand the conference over to the management for closing comments.
Thank you everyone for joining us today. My voice was not clear because I'm down with the cold. We appreciate your time and interest in the company. If you have any further query, feel free to contact our investor relation advisor SG or can directly send the mail to us. Okay, goodbye.
On behalf of IG Petrochemicals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.